Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. So today, our webinar's title is Investing is an Endemic Pandemic Era. So good evening, everybody. So if you can hear me, see my slide, and see my webcam, please type yes. Let me know. Sometimes the slide may not seem to show. Right, so it's working. Perfect, fine. Okay. So my name is Chen Chu. I'm the moderator for this webinar. So today we are going to cover a very interesting topic, which is what are the investing strategies and how should we invest in this endemic and pandemic era. So we have got our speaker to speak for us for this session. This is his first speaking gig with Bursa Malaysia. So let's welcome, let's give him a warm welcome, okay? So before we begin, let's go through the disclaimer. As usual, whatever we share on this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or for you to sell any company. So if you decide to make any investment decision, you're 100% responsible for all your investment risks. So allow me to briefly introduce our speaker today, and he is King Hao Kai, Senior Analyst of Spiral Thinker Group. Now, King began his career as an oil and gas engineer in a local public listed oil and gas outfit. So after more than 10 years in the industry, he decided to move on to pursue his passion in investing by joining a Spiral Thinker Group. So King recently completed his CFP certification program and is currently overseeing the Omega division in providing portfolio consultation and accounting services to the group's distinguished clients. So King possesses an astute observation skill and is meticulous in his thought process. He has a structured way in information gathering and deriving insights from both quantitative and qualitative driven data. So today he's going to share with us the strategies to invest in the pandemic and endemic era. So without further ado, let's welcome King. Hello, King.
Hi, Chen Xian. Thanks for inviting me. Yeah, this is my first time on Bursa webinar.
Yeah, good to have you here. We can't wait to hear from you.
Yeah, thanks. Okay, let me share my screen.
Yes.
Okay. Yeah, can you see my screen?
Yes, perfect. Can see your screen.
Okay, so yeah, without further ado, let's start. So today I will outline our topics into 4 big groups. Okay, actually, when the first time, we started, the idea for this investing in an endemic pandemic era. There's one thing that didn't yet to happen at that time was the Russia Ukraine war. Okay, so it happened in February. So I think we opine that this is quite a big event that would eventually impact our investment, our global economy as well. So apart from the pandemic, the COVID pandemic, that's why we have added this additional main topic inside this. Okay, so I will start with the first, which is the transitioning from pandemic to endemic. So as we all know, right now, after 2 years of the COVID pandemic, so it seems that everyone is starting to get used to the new norm, okay? And eventually right now, everyone is starting to talking, we want to go back to our normal life, pre-pandemic, okay? But definitely there's something that has changed. We have get used to wearing our mask whenever we step up from our room, from our house, okay? And then we also get used to, wash our hand more frequently, and then try to avoid, public places with many people, okay? But, and then somehow I find it quite interesting also, recently is we are immune to the COVID cases. Especially starting maybe this year. As you can see from the data, this is I pull out from the COVID now. Okay, it's from government data. You can see that we started. We start to capture the COVID numbers from since February 2020. It was 2 years back, right? And you can see how it evolved. So during the Delta variant back in last year, mid of last year, you can see the numbers have reached a high and it came down. And starting early of this year, it went back up again. And even, more than the Delta variant, which we registered our COVID number cases. Okay, this is due to the Omicron variant. But if you look at the hospital administration, it's quite similar, although the number of cases is much more. And I do believe this number may not be that accurate. We may have more unreported cases because right now everyone is doing a self-test, right? So I don't know. Somebody, they may not report every cases. Okay, but fortunately, if you look at the numbers in terms of number of patients in ICU and death, it seems that it is not, going in tandem, rising in tandem with the number of cases and the hospital admissions. So I believe this is somehow a good sign. Okay, it means that the Omicron variant is, in fact, is not that dangerous, or the damage is not as bad as the Delta variant that we experienced in last year. And that's why, governments around the world, they have started to embrace the endemic phase. We all want everyone to go back to the normal pre-pandemic life. And that's how our government, Malaysian government also, they declare that, we will transition to an endemic phase starting next month, 1st of April, okay? And right now, how do we see this? There's a lot of articles, there are a lot of reports, right? And also, reports from especially from the scientists regarding whether do we see, this COVID disappear in this year or in the near future, or it could continue to be in our life. It stay with us forever. So, most of the scientists actually, they do have sort of like opinion that, we may have to may live together with the virus for quite a long time and maybe for generations to come. So instead of just Omicron, it would not end here. Okay, we might hear about another more variants, with different names. Okay, but we do hope that it somehow is we able to control the damage. Okay, and so they lay out some of the scenarios. Okay, let's have a look. The first one is optimistic scenario. Okay, of course, we will hope that the pandemic would eventually disappear. Okay, or we have got enough people that have been naturally immune to it, and we can suppress the virus to a permanently low levels in the populations. Okay, against it is, which we may see that is a little bit more pessimistic scenario, in which we may see that there's a random of threats of a new or unforeseen virus variant rising, just like maybe a Omicron or even like a Delta, which can cause more illness and death, and it extend the pandemic. Okay, so that we may not go back to endemic or our new normal life. We still have to live on partial lockdown or fully lockdown. Okay, so this is the pessimistic scenario. Okay, but eventually, when we're looking for mid to long term, okay, no matter how, it seems like the virus will not go away. Okay, we have to find our way to try to live with it. Okay, so that's why all the scientists, they are suggesting that all the governments, the agencies, okay, all the human, we have to stand by and we have to be alert all the time. Okay, so we have to establish a more modern alert system to warn the potential outbreak in the future. Okay, immediately, so that we can quickly respond to it, and as well as we must stand by and be prepared with a lot of more simpler and more quicker testing kits. Okay, just to identify the outbreak, and then we try to contain contain it, not to let it spread to other a bigger area, okay? And of course, probably with the regular vaccinations, okay, this is what we are experiencing right now, okay? From maybe 6 months to 1 year, everyone will need to go for another jab again, just to boost out your immune system, okay? That's what is suggestion from the scientists, okay? But by no means, I mean, these are the scenarios that we are looking at, okay? And then, of course, we are looking, I mean, we hope for the best to happen, but okay, anyway, there's I mean, everyone has to agree that at some point the pandemics do end. It's just like how back in 1920 something, I mean, when the Spanish flu outbreak, okay, it did end at some point, maybe 2 years, 3 years, right? So no matter how well, how badly they were, so it will end at some point, okay? So this is the fact, I mean, this is the natural progression, okay? So we hope for the best, and let's see how we can do. And so right now, in conjunction with our transitioning to endemic phase, the government also decided to open up our borders, okay? Because to try to, I mean, save our tourism industry and save our airlines, and to get more, of course, to get more tourists, and to help to get more income for our country, right? So the government has declared that our Malaysia will reopen our border starting from 1st of April. And let me show some statistic, okay? This is from the CIMB research, okay? So as you guys can take a look on the numbers of passengers, this is from the international and from domestic. This is the whole world, I mean, the nationwide, okay? So you can see, we may assume that back in 2020 is the start of the pandemic years, right? So there's a full lockdown, I mean, for a few months, okay? We will assume that actually the numbers would be quite bad, right? But actually, if you look further detail, if you compare to 2021 numbers, actually 2021 is worse than the year 2020, okay? In terms of international traveling passengers, as well as the domestic passengers. So actually last year was the worst year for the airports, for the airlines, even for the tourism, okay, for the hotels, and for some restaurant business, okay. That's the worst year, okay. So fast forward, with the borders opening, so the analysts, we start to, I mean, presume that, I mean, the numbers of tourists will start to climb back, okay? Tourists will come back to our country, and they will spend. So here's the projections, okay? 2020, 2022 and 2023 will be the main important year that we will see the coming back of the tourists, okay? If you compare back to 2019, actually the numbers still will not be fully recovered, even up to 2023. So actually it takes quite a long time. It's been 4 years, okay? It's a very bad time for, especially for a lot of like aviation, leisure, hospitality, in those, I mean, the companies in those areas. So with the reopening of our border, so these are the sectors that definitely is worth to watch out, okay? But I mean, we have been talking about this, I mean, I think since 2020, even 2021, okay? After the vaccine rollout in 2021, we thought we can, I mean, at least get back to, I mean, start to reopen our borders, but actually it didn't, okay? We have to wait until 2022 this year, and there are still some uncertainty inside, okay? Let's say China recently, they started some massive lockdowns again on some of their big cities like Shenzhen, okay, like Guangzhou, partial, and maybe some Shanghai, and maybe in their northern cities. So, I mean, these are the exceptions because of their zero COVID policy. But I think moving forward, as the Western countries they start to open up, I think we will follow. We will follow the Westerners. Okay, so I think definitely these are the sectors that worth to look at. Just imagine, the airports. Okay, let's say the airports. So if really the passengers numbers climbing back, not close to 2019, so you can expect their revenue and their profit will start to recover even back to 2019. So the share price definitely follows as long as they can show the results, right? And then, of course, we can say, like the Genting Malaysia, they will benefit from the return of the tourists as well as for the hotels. Okay, I would like to caution that. Although the government has said there will be reopening of the borders, but it also depends a lot on the situations, okay, on how the pandemic evolve, okay. If let's say there's no other, dangerous variant that emerge in the near term, so we will see more and more tourists coming back, okay. That's a good sign, that's a good. But in terms of like some companies like Asia, okay, we have to relook on their fundamentals, especially because especially on those companies with some type of cash flow, or even on the working capital. Okay, so these are the immediate threat that to some of them. Okay, and then I do believe Asia they should be able to get some working capital, because this is a huge opportunity for them. Okay, it's coming in. So let's have a close watch. Okay, next. Okay, this is the one article that we saw it in the Economist. Okay, immediately when I saw this article, I think all the points it hits very well. Okay, and this is David did summarize it, and he did presented, I think, in one of the Bursa webinar last year. So I'll just reuse, because more of the point actually still pretty relevant, and in some point it sounds to me a bit scary as well. As you can see, the certainty is still remain the same. Okay, COVID-19 is still far from eradication. It's still in our society, in our circle. Okay, even though most of us we have got the vaccine, have been vaccinated. Okay, adoption of new norm, yes, everyone is practicing right now. Okay, and digital transformation, yes. Okay, there's a hybrid of working. Work from home or work in office. There's a hybrid of it, and we can see more and more companies they are adopting this. Okay, and then economic policies, yes. Targeted lockdown, yes, it still happen from time to time as well. And stock market volatility, yes, definitely. Everyone experienced, right? Since 2020, every time, every year, every few months or every month, the market is still pretty much volatile. And borders reopening, still some uncertainty, although we have got the dates coming out. Okay, vaccine efficacy, yeah, everyone is still doubt on it. And then from months, every 6 months or every 1 year, perhaps we will need to get the jab. And okay, there's some oral treatments. Okay, there's some this medicine coming out already. Okay, that's a good sign. And then global economic recovery. Okay, it seems that we have somehow recovered from the bottom of the pandemic during the outbreak, the first outbreak of the pandemic, right? But it seems that there's still a lot of uncertainties because of the partial lockdowns in certain countries. Okay, and then there are still some glitches in terms of supply chain. Okay, and then we are seeing the long-term economic effect from this pandemic, which is one of it is the inflation. Okay, it's definitely is affecting our life already, and this will it will impact our global economic recovery as well. So, and if you look at here, the social implication, actually it hits almost, it ticks almost all the boxes. To my fears is even we are seeing the signs of political instability right now happening right now, and I hope this will not happen, but it seems that the social unrest could be happening, I mean, in the near future if this continue to happen, which I will explain more later, I mean, in my subsequent slides. Okay, so let's move. The next one is the main key theme that we want to discuss today is of course, the Russia-Ukraine war. Okay, so actually from when the first war, I mean, when the Russia, they declared the military invasions into Ukraine on the 24th of February, to me, it seems like, I mean, it didn't, I mean, alert me a lot. I thought it could be just a small event, but eventually when I go to read out, I mean, when more and more readers are reporting, and then when we see the seriousness, actually, this could be one of the events that could be one of the biggest events in our recent years. Of course, it's the largest military attack in Europe since World War II. Okay, and then I mean, coincidentally, or maybe I mean, we just finished the Winter Olympic in China, in Beijing, on 20th of February, and Russia, they intended to invade the Ukraine on 24th of February. So I mean, according to some news, I mean, there's some theory behind it. Anyway, the US, they did also warn that the Russia would invade Ukraine, I think early of February. Okay, so but at that time nobody actually believed it. Okay, and Russia came out and to openly say that they would not invade Ukraine, but after that they declared special military actions, okay, in Ukraine. So I mean, this somehow, I'm not sure whether is it a black swan or is it a gray rhino, because the conflict in between Russia and Ukraine actually then be started. I mean, after especially after the 2014, okay, when Russia, they decided to annex the Crimea, okay, and then and right now all the countries, they start to begin imposing sanctions on Russia, targeting their individuals, their banks, their businesses, okay, especially I mean on their transactions. So this is a very big impact especially to the Russia, to the Ukraine, and even to other global economies as well. You can see that right now Russia is the most sanctioned countries in the world, okay, right after Iran, okay, after they invade Ukraine. And to my surprise that there are countries that they start to sanction, and there are also private companies that voluntarily start sanctions on it. Okay, it could be unheard of me, especially to me. But to me, this kind of like you are actually declaring a warfare already. Okay, because the people, I mean, in the Russia, they will really suffer. Okay, you can see that all these are companies that they provide the foods, provide the drinks, provide the clothes. Okay, this Zara, this H&M. Okay, these are provide the coffee, and this provide the FMCG. I mean, companies, IKEA provide the furnitures. I mean, when they say the sanctions, so basically they will just close all their businesses, okay, all their shops. You can imagine that how many people they lost their job overnight, okay, for those Russians, okay, and then this will have a very big impact, okay. The companies, they are easy to say that they want to sanction and pull out from the countries, but it takes more time and it takes more cost for those companies to go back to the country to start the business again, okay, and it will not be so easy. So you can imagine that, I mean, definitely the Russian people, they will suffer going forward, okay. Of course, there were some other substitute, alternate, local companies that provide the same services, but we cannot deny that the damage somehow is done, okay, and then we just hope that, and it's to me that it's shocked that private companies, they are voluntarily suspended. Based on the humanitarian reason. Okay, and of course the sanctions, we see that, okay, although the Russian GDP is not that high, okay, compared to they are the largest, their biggest, country in the world, okay, but their GDP is not as big as the US, okay, but they are the superpower for the commodities, especially for oil and gas, okay, and also they are the food producer as well as they are one of the largest producer for the fertilizer. Okay, I will explain later in more of my slides. Okay, but we all know that right now the oil prices have surged to the highest since 2008. Okay, just because of this event. Okay, and then I'm not sure whether you guys are aware or not. Actually, RON 97 in Malaysia right now is about 4 ringgit per liter. Okay, RON 95. Luckily, because of the subsidy from the government, we're still able to enjoy about 2 ringgit and 5 cents. Just imagine if without the government subsidy, it's double, our transportation cost. Just imagine that for our own. And how about the transportation for our food? Definitely everything will be double up, just because of this. Okay, and let's take a look on the whole picture. Who are the largest oil producer in the world? Okay, this is based on some research report, okay, from the CMB, from IEA, and from USEIA. Okay, somehow I summarize it. Do take note that this figure are just estimations. Okay, in fact, I think nobody actually they know the exact numbers are. Okay. And then more importantly is we shall look on the percentage. Okay, you can see that there are 3 parties that actually they are quite significant over here. Okay, we have OPEC, 13 members. Okay, these are the 13 countries that are categorized as OPEC, and we have US, we have Russia. Okay, you may be surprised that you can see that actually US is the largest oil producer in the world. Okay. And then the second should be the second should be Saudi. Okay, it should be Saudi Arabia. And the third one would be Russia. Okay, and the fourth, Canada. I think over here, Asia Pacific is inclusive of China. I think China will come at 5th. I didn't break that in details. Okay. Anyway, I just want to highlight that production is not the same as export. As you can see that US is the largest producer, but they are not the largest exporter. In fact, I think Saudi is the largest exporter as well as Russia. Okay, because US basically whatever they produce, they will just use it for themselves. Okay, and you can see that according to plates, okay, the Russia exported up to 4.5, so it's about half of their produce half of it they use for themselves and half of it they export out. Okay, so and if you look at in total, the oil demand for this expected for this year is about 100 million barrels per day. So right now you can see that for last year we produced about 95. So actually, in order to catch up with the demand, because of the reopening of the economics of the borders of the countries for this year, most of the countries in over the world, so definitely the oil demand would surge, right? So we can expect that all of these countries they have to ramp up their productions, okay, just to catch up with the demand. But at the same time, with this event coming in, so the world may potentially lost about 4.5 or about 4 to 5% of the oil supply in the world, just if everybody will sanction the oil export from Russia. This is very, very bad if this happens, because I do not think that any single country that can ramp up their productions, they ramp up their export up to 4 to 5%. It's impossible, to be honest, impossible. If you say Saudi Arabia, yes, because during the pandemic, this OPEC, they agreed to reduce their productions, right? And right now they're slowly ramping up already. But I think the figure that here I capture is about their optimized productions. So it means or the sustainable productions figures already. So in order for them to ramp up more, it seems like impossible. So I mean, if really the world going to sanction, I think the oil price will continue to surge. In the shorter time. Okay, this is the worst case scenario, of course, and the next is we go to this gas. Okay, so Russia is also the largest exporter of gas in the world. And where do they export? They mainly export to the Europe countries, about 72%, and Asia and Oceania about 11%, and some other non-OECD, Europe and Eurasia about 17%. Okay, so about close to half of the European countries, they depends on Russian pipeline gas energy export for their gas need. That's why when this event happened, actually the Europe is facing an energy crisis right now. Okay, and we have to, in order to see how big the impact it is, we shall also study what is the use of the natural gas, okay, especially for the Europe and the UK. You can see that a lot of them are being used to generate electric power, okay, for industrial use and for residential, because over there, especially during the winter period, they need the gas, they need to burn the gas to get the heat. Okay, that's why if really they going to cut off this pipeline or energy export from Russia, I think the European people, they were going to suffer a lot, and it will be very, very bad for the economies, because you can't operate your factories. Okay, even you can't stay comfortably, especially during winter. You can't on your heat. Okay, you can't on your heater. And then even the worst that is, you can't even surf the internet, or you can't even get online, because you will be cut off from electric power. Okay, so this is the worst case scenario, of course. Okay, worst case scenario. So you can see that actually there's a trend that is quite obvious, that back starting in 2016, okay, there's a ramping up of the consumption of natural gas in the Europe, because during this period, actually they start to retire a lot of the coal-fired power plants due to the rise of ESG. Okay, in the Europe, as well as particularly in the Germany, because the Germany, they start to denuke. Okay, that's why they are shut down most of their nuclear power plants, and hence they switch to rely a lot of natural gas powered power plant. Yeah, so we can see that's quite obvious the trend. And next is, we can see that actually there's two ways to import the natural gas. One is by pipeline, which is, you can see by pipeline, which is it's a lot of percentage. I think more than half of it, the European countries, they import by pipeline. And you can see that the largest contribution is from Russia, and some from Africa, and from Norway. Norway also quite a big chunk of it. And from the LNG is liquefied natural gas import is over here is US is the largest. Next is Russia. Next is Qatar, and Russia came at third. And then there's one very obvious trend is, over the years, the domestic production of the natural gas in the European countries has been declining from year to year. And this due to the resource depletion, especially in the Netherlands, okay, as well as the rise of the ESG of the activists. Okay, they have not been actively pursued to develop new gas field. And then they start to from here they start to rely a lot on the external countries like Russia. That's how it comes to the current awkward situation for the European countries, that they somehow their livelihood is rely a lot on the Russia itself. Okay, and then So I just want to touch a little bit on the differentiation in between the pipeline and the LNG, liquefied natural gas. Okay, the pipeline is basically from the gas field. They will just construct a huge pipeline connecting from the field to the countries. Okay, there will be some receiving infra over here lah. Okay, so basically the medium is normally is in gas or less of the liquid. Okay, so this I mean in terms of cost, actually this will be cheaper than if you're going to build liquefied natural gas, which is the LNG. You can see that actually here are the LNG. These are LNG carrier, and these are the ports or the infrastructure that going to receive. So the LNG is the in the natural gas form. In the gas form, we're going to compress into a liquid form. Okay, to make it natural gas into a liquid. It's just like our household, the one that we use to, to cook the gas, right? That's in the liquid form. So you can imagine that all of this we compress into a liquid, and then we send it through a ship. Basically, it's through a carrier, LNG carrier, we call it. And the carrier, they will park at the port here. There will be a port receiving it, and then inside the port, there will be a regasification process. Means you have to convert the liquid into the gas, and you have to find a place, a tank. You have to erect a tank to store the gas as well. So for developing all this infrastructure, it costs a lot. It costs a lot. So sometimes it's even, costly than you building a pipeline. Okay, that's why, people would normally rely a lot on the pipeline instead of LNG. Okay, but anyhow, because it's the EU, the European countries, they are connected with the land, right? That's why it's easier to construct a pipeline. From Russia or even from the Qatar as well. Okay, of course, there's some subsea, section as well. Is where the Nord Stream over here. There's some portion that they go through a subsea or subbed. Okay, but of course, when you do this, the cost will escalate a lot lah. Okay, but in countries like let's say Japan, Korea, or Taiwan, which is the island basically. So normally they have no choice. They have to rely a lot on LNG. And we in Malaysia, we are one of the largest exporter to those Asian countries, but we less export to. We normally don't export because it takes a very long journey as well to export from Malaysia up to Europe. So in near term, if the Europe they really want to reduce the reliance on the Russia, they have no choice. Of course, they have to request more gas from Qatar, from Algeria, maybe from Libya, and of course from US. And US normally is come in this LNG form. Okay, so these are the immediate solution that they may rely to. Okay, anyway, just for info that this Nord Stream 2 is a very large project. Okay, which they have been completed, but it's pending commissioning. And right now, after the war breakout, so the Germany, they have decided that they have frozen the approval process for this. So again, in terms of the European countries, I read that actually Germany and Italy, they more about half of their supply actually is rely on the Russia. So these two countries will be the most heated countries if really they're going to cut off the gas supply from Russia. Okay, so from oil and gas, right now we move to, just now I also mentioned that Russia and Ukraine, they are the large exporter of this food, right? So especially for selected crops, this interesting report from FAO, okay, and the Food and Agriculture Organization of the United Nations. So they give a very clear, picture. If you look at this wheat, okay, Russia is the largest exporter, and Ukraine came in the fifth, and the barley, they are the second and the third, and the sunflower seed oil, they are first and the second. So the wheat is one of the important source of carbohydrate, okay, alongside with rice. Okay, in Asian we normally eat rice more than wheat, right? But we do take a lot of wheat, lah. Okay, your bread, your roti canai. I mean, all these are the made from the wheat. And for the Westerners, I mean, they rely a lot on wheat, okay, in their daily food. So you can imagine that if I mean the disruption is happening already. So when the Russian they decide to not to export, and the Ukraine, because of the war, they cannot produce, they cannot export. So this will be a very, very big impact, okay? Not only for this year, no. Just imagine during the outbreak of the pandemic, right? Everyone is, I mean, they will be panic buy because they will like, I mean, they will acknowledge that there will be a shortage of food supply. So everyone would go and, I mean, to buy more food, okay? They will hoard it, okay? They will keep it. So you will buy more than what you needed, okay? So this will definitely disrupt the whole supply chain, okay? Just imagine right now in this situation. So a lot of countries, they will start to holding up their wheat, their food, their barley, their sunflower seed oil. This will not help to ease the situations, okay? And definitely those richer countries, they're able to buy more because they can I mean give a higher price, okay? But just imagine the impact to the poorer countries, okay? And there's one more thing we have to, I mean, be aware is right now these two countries in war, right? Their farmers definitely they may not have enough farmers, or they may not have the ability to produce. And right now is the best season to start a new crop. So you can imagine that, I mean, for the coming years, there will be a shortage of supply, just because you already disrupted the whole production process. You didn't start, I mean, the crop this year, so it will affect the production for next year. And I mean, there will be a cascading effect for years down the road. So this will be very, very big impact for the whole food supply chain. Okay, so I think this is the fact that everybody will have to be aware of. Okay, and I think due to this, the food inflation, definitely we are not going to see a slowdown. Hopefully that, I mean, we manage to control it a bit. Okay, so this, and one more, I mean, we all know that in order to plant a crop, you need fertilizer, right? So in this world, normally we break into three types of fertilizer, which is I mean, widely used in all of the countries, which is the nitrogen type, the phosphate, and also the potash. And unfortunately, Russia is the #1 top exporter for the nitrogen fertilizer, okay? And they are the second top exporter for these two of fertilizer. You can just imagine how big the impact would be if they stop the export of this fertilizer. It will affect, basically it will affect all the farmers in all of the countries, I mean, okay? And of course, the one that will get hit most badly is those in the Eastern Europe and Central Asia, which that depends a lot on the Russian fertilizer, okay? But this will not just, I mean, just impact them. Perhaps, actually, it will impact the whole world. Because why? Because there's been a shortage already. And then, as we all know, natural gas actually play a very big role, especially in the nitrogen fertilizer, because nitrogen fertilizer rely a lot on this natural gas. And right now, natural gas, the price is, I mean, is absolute, I mean, is insanely high, okay? So indirectly, it will affect the fertilizer price as well. So all this, I mean, it will just escalate, okay? And eventually, it will hit our food, okay? So just brace for, I mean, based on this scenario, as we can see that actually what we experience right now, it may not be the whole picture, okay? Because all this, there will be some lag effect, Okay, it may take months, or it may take weeks or months or a year to cascade down the effect. Okay, just imagine. Okay, the fertilizer, I mean, right now, because of the high price of fertilizer, and don't forget that, I mean, the farmers, they need this fertilizer to start the plantation, right? So because of the high price, some farmers, they may decide that, oh, I cannot afford it, so I cannot, I mean, plant the crop. So you will have less supply. Okay, just imagine when this happened to, I mean, from a smaller group of farmer to a bigger group of farmer, and then to some big producer, it will definitely, it will affect, it will impact the whole food supply chain. Okay, so for me is these are the things that we have to be, I mean, highly alert and to monitor. Okay, and so here's the thing. I mean, from the start of the war, we thought that, I mean, the war could end pretty soon, right? And I think this is what the Putin has been expected as well. Okay, he thought that his armies, his troops could quickly control the whole country, but eventually it drags until now. Okay, it has been a month, and we haven't seen a very positive outcome from it. So these are, I mean, these are the scenario that I'm trying to, I mean, we're trying to, you can see that my thought process of it, okay, how we see these things and how it pans out, okay. I just want to clarify that this doesn't mean that, it doesn't mean that the things or the situations or the scenario that we wrote here, it may happen. It's just, I mean, we are just trying to, to see what are the possible outcomes or what are the possible impacts that would arise from, I mean, from some of the scenario that we are experiencing right now. Okay, so first is the impacts to oil and gas, of course. So we can see that European countries, they are in the energy crisis right now, okay, because they depend a lot on the Russian gas and also Russian oil, okay. And then if this situation drags longer, and if really they're going to cut off the gas supply, okay, right now the European countries, they are saying that they have enough gas for this year, okay, but at the same time, they also start to build out, I mean, the storage for the next year already. So based on this scenario, I do not think that the gas prices will come down, because you have an active buyer, which are the European countries. They are actively buying out the natural gas from the market. So I think the gas prices will still stay elevated at the high price, at least for the short term, because, I mean, basically everyone just want to grab and want to store it, okay. And then, but in the mid to longer term, okay, if you have an energy crisis, definitely you have a lower industrial output, and this definitely will affect all the businesses, all the companies. And don't forget, European countries, they are one of the largest, I mean, they are very important to the global economy. And if they are facing a potential recessions, and this would be a very bad for the whole global economy, okay. And then, of course, for the other countries, of course, they may not be badly impacted because they do not highly, I mean, depends on the gas supply or oil supply from Russia. But because of this event, basically everyone is experiencing a very high oil price and gas price, right? And the high oil price and gas price means a high energy production cost, means your electricity bill will escalate. Okay, those that industry that use a lot of gas, they will face a cost escalation as well. So, I mean, it may not hit those richer countries, but definitely it will hit those poorer countries. And then don't forget, I mean, once it hit it, I mean, we may see more and more political instability start to, I mean, coming up. start to happen. And then don't forget, actually Russia is the world's third largest coal exporter as well. So you don't have gas, you don't have oil, so you want to go back to generate power using a coal, right? But right now they are also the largest exporter. And then the coal price has been high because of the sanction of the China government towards the coal export from the Australia. And even China right now also they are, I mean every country is also experiencing this. So I think, the energy crisis seems that it's quite obvious already right now. It's happening in Europe, and sooner it may happen in other countries as well. And this definitely will cause inflation in the end. And food, okay, inflation just now, okay, because of the food, because of this wheat, and because of the, especially on the fertilizer, okay, so we will experience inflations, and the food prices definitely will push up. It will cause worldwide inflations. And then the high food price, it may also cause a social unrest in some other countries. And when you have social unrest, okay, and when you have a political instability, so you can expect that we may have more geopolitical risk, especially coming from like countries like the Middle East, okay, or maybe from the African countries, okay. This, there's a chance to happen, okay. And then third is their impact on industrial, okay. We all know that, just now from the previous slide, we all know that the gas are used to power the factories, right? And then, so if you have a shortage of gas, so definitely it will impact the factories. And then not to forget that actually Russia, they are quite a big exporter. There are some exporting, they are also producing some parts for automotive. There are companies that which set up factories in Russia as well, and as well as a steel production. So there will be, when you cut them off, so you will have the shortage of this as well. So this have to be replaced for other countries. And then they are also one of the largest producer, exporter for nickel, for palladium, etc. All this will be disrupted as well because of the war. So definitely, the supply chain issue, it will continue, to be unresolved, okay? And then, it will just keep the inflation afloat. And logistic, okay? Right now, due to the pandemic, there's a choke of the logistic, and we still haven't really settled, okay? Just imagine, because of the lockdown in China recently, again, we are also experiencing the logistic problem right now. And just imagine that because of this war, they have, declared a no-fly zone in Russia. So some of the airline routes has been disrupted, okay, because of no-fly zone definitions. So, the flights, they have to reroute again. It will take a longer route. So indirectly, this will cause the transportation cost to go higher. And of course, because of the war, so the insurance company, they start to charge some war risk surcharges for the transportation companies. So all this will add to the cost of the transportation cost. And because of the sea freight, because of the congestion of sea freight right now still remain unsolved, congestion in the ports around the world. So, in the past 2 years, we have been relying a lot on the air freights, right? Try to relieve the burden from the congestion of the sea freight. But it seems that right now, air freights also will be having the issue because of the no-fly zone. So because of the rerouting of the airplanes. So, at the end, all this will add into the inflation as well. And then high oil price, definitely all your trucks, they need oil. So this, they will increase the transportation cost, and in the end, into our food and inflation, okay? And finance is the things that, definitely when we see there's the slump in this Russia market, the stock market, okay, they tank, on the day. And then I think right now they have slowly reopened already. But of course, most of the stock we see a very huge decline in their values. We just imagine some of the ETF or some of the funds that invested in those securities or those stocks, they immediately see the erosion of the value. Okay, and this may prompt some of the redemption of the money from the funds or from the ETF. Okay, and also don't forget that some of the sovereign, we haven't heard. I'm not sure about this. We haven't heard that the default of the sovereign debts from the Russia, but it may happen. So at this time, I must say that we are still studying on the impact of this event on the stability of the global financial system. Okay, and then the last is the geopolitical. Okay, definitely this. I do not hope that this thing will happen. Okay, because if you think everyone is pointing to potential World War III if the things escalate. Okay, and then from time to time we can hear that maybe the Russia, they want to use the nuclear weapon, and then but there's one sure thing is most of the European countries, like German, they have already came out to say that they will increase the military spending. Okay, I think right now German, they have increased from less than 1% of their GDP to about 2 to 4% of their GDP going forward. So I don't think it's a good sign that every countries, they start to buffer out their military spendings. Okay, it means that everyone is start to feel the insecure right now. Okay, so this is not good for the whole world. And I think in the worst case scenario, we may see that a potential World War III or a new Cold War 2.0 happening. Okay, and all these are bad to the country. So you can see that they could be a separate of the West and East. Okay, with the US and European countries, they form an alliance. Okay, and then Russia right now has been sanctioned by most of the Westerners, so they have to resort back to China. Okay, so if China, they help, and the China may face pressure or may get potential more sanctions from the US and for the European countries. So definitely all this is no good for the global economy. Yeah, definitely it's no good. So I would say that these are the potential. Definitely we hope that all these things will not happen. Okay, some may start to happen, but we just wish for the best. Okay, we hope that they will quickly reach a stage to cease fire. Okay, and then everyone will start to focus back to how to recover our economy from the pandemic. So here's the things. For all the bad things that I've explained, over the 1 hour, I hope that it really it don't demoralize you. Okay, so here's a summary of us. Okay, from us. So we would suggest all the investors to be nimble. Okay, especially during this period. Okay, because we can see that a lot of risks and uncertainties lies ahead of us. Okay, some of it is first, of course, the resurgence of COVID-19, and then our supply chain or disruption. Okay, and then inflation is worsening. I think everyone is experiencing right now. Central banks interest rate hike. US has declared already. Okay, they're going to hike, and I think most countries, they will follow. But here's the trick. Okay, because of this Russia-Ukraine war, so the central banks, it may impact their decisions. On this interest rate hike. Okay, because in the worst case scenario, it may cause a recession, or it may cause a stagflation. So they are pretty. They are pretty much aware of this. I think the central banks. So I think, especially for the ECB, we may see a slimmer chance for them to hike, to increase the interest rate. Anyway, I mean, there's still more coming out, okay? Maybe a potential of new Cold War, World War III, economic recession, stagflations, okay? Anyway, as we often say that crisis begets opportunity. So they are actually, we can turn all these crises into opportunities. It depends on how we view them, okay? So first is the energy crisis. Definitely there will be opportunities coming out from here, and especially on the food as well, food crisis and the supply chain crisis, okay? So from this webinar, I will just roughly briefly go through energy and supply chain security opportunities. First is energy crisis. So I think right now is an important time for us to see how the European countries, they react to their current supply chain, the energy crisis. Okay, as you can see that they are the pioneer, okay, among all other, I mean, nations to start to adopt the ESG and start to adopt the net zero carbon policy. That's why there's been a pioneer in trying to rolling out these green projects, okay, and then they advocating the renewable energies, okay. They are promoting, they are big promoter, okay, compared to US. So there are two camps over here right now. When they view this war, this Ukraine and Russia and Ukraine conflict. Okay, one camp is they opine that due to this war, okay, the renewable energy, they may be slowed down, okay, because every countries right now suddenly, I mean, woke up to see the importance of the fossil fuel to our daily life, okay. And another camp is they will think that this is the period, this is the event that it will actually accelerate the development of the renewable energy, okay. Especially this camp, I mean, those in this camp, the second camp is actually, they should be coming from the EU side or the European country side, because as just now as I lay out, the European countries on their own, they have not been able to produce enough of gas or even oil for their own use. They have to rely on third parties, okay, like the Russia or even like the Qatar, US. So I don't think the governments in the Europe countries, they would continue on this, okay. Who knows, one day maybe they will have a conflict with even like US or even like Qatar or even some of the African countries as well. So I mean, that may not be a good options for them. So I will see them, actually they will push more for renewable energy projects, okay, for their own good, okay. This is for the longer term, yeah. So that's why you can see that from their 10-point plan to reduce their reliance on the Russian natural gas, they have, I mean, they have clearly stated out that they will accelerate the deployment of new wind and solar projects, okay. And then, of course, for the near term, of course, they have to diversify their gas supply. They have to get more alternative sources from other countries, like from the US, from the Qatar, from the Algeria, okay, from the other African countries, okay. And that's why, and even some of the countries, they may resort back to nuclear, I mean, power plant, okay. So I mean, this is the things that, I mean, this is the sign that we are seeing right now. And actually the EU, but there's one silver lining for oil and gas actually, and it's on the gas, okay. So actually the EU, they have plans to declare nuclear and gas as green. So as they also aware that they came to realize that actually you can't really phase out natural gas so soon, okay. And then actually natural gas emits a much lower greenhouse gases if you compare to like oil. So that's why, I mean, for the I think for the next decades, we may still see that the natural gas will still be a very big contributor to this, overall power plant, the energy generation. Okay, so and then they are also a very good partner for the renewable energy, because this solar and wind, when there's no sunlight, you cannot power, right? When there's no wind, there's no power. So during this period, you have to rely on something on the fossil fuel, like the natural gas, which natural gas is actually pretty fast. The natural gas power plant is very fast for you to switch, to start and stop. So it's very efficient. Yeah, that's why, from the oil and gas, point of view, I would think that we may see a decline in the use of the oil, but for natural gas, I think we may see that there are still constant development in this in the natural gas parts. Okay, and so here's the forecast from the IEA. Okay, so as you can see that for the next decades to come, okay, so there will be more money will be pouring in to develop renewable energies, okay, to develop the infrastructure for the renewable energy, and to deliver like the end use, like for the cars, for the EVs. Okay, so as an investor, normally we will need to follow the smart money, right? So we should see where the smart money will go for the next decades. Okay, so I would think that for the first one, definitely will be renewable energy development, such as the solar and wind. If you embrace more and more solar and wind, okay, or the renewable energy, so you have to upgrade your electricity grids, okay, and you need to store the power as well, because the supply of this solar, wind, or even hydro, they are inconsistent. Okay, there are times that they are bad, or there are times that they are surplus. So you have to balance out. That's why the battery storage and the electricity grid is very, very important. Okay, and if any part of it is fail in the future, we may experience more and more disruption of the power. Okay, so I think in order for the development of the renewable energy to really, flourish in the future, these two are very important field for the human to solve it. Okay, and of course, we are seeing more and more EV cars on the road right now, and more and more people they would adopt it. So this is the big trends to come. And if you need EVs, so you will need the charging stations, right? So we believe that these are the very, very big trends, that secular trends that coming in pretty firm, okay, for the next 5 to 10 years. And we'll see more and more money that are going into this. And I think it's wise for us as investors to take a close look and to follow on the development of this. Okay, and as for we can also see that there are more and more oil majors. They are getting the pressure from their shareholders, from their financial, from the banks. Okay, to start to invest, to involve more into renewable energy. And in fact, actually, there are more and more financial institutions. There are more and more funds that they are reluctant to fund the traditional, oil and gas projects. That's why you can see the smart money, they have started to show their power, okay, where they want to flow, okay. And then we are also seeing that, more and more traditional car makers, they are launching more EVs this day. So this is the trend that, is very obvious for us to see. So I will just give a brief case study. So there's one company listed in local that involved in the oil and gas, in renewable energy, and in green technology, which is Insen. Okay, Insen they are the 6th largest FPSO leasing company in the oil and gas. Okay, so basically they build and they lease out the FPSO for the oil majors to produce and to export the oil and gas in the middle of the sea. So they have a long-term list with the oil majors. Right now, they have about 15.3 billion order book, okay? And then they have 6 FPSO under leasing, 3 new FPSO under constructions, okay? Besides that, they also start to venture into renewable energy space, okay? So right now, they're operating a 140 megawatt solar plant in India, 190 solar plant under construction, new solar plant under construction in India. And just recently, they announced that they have taken over another 486 megawatt wind farm constructions in Brazil. In terms of green technologies, they this I think end of last year and early of this year, they also announced that they are establishing a JV with a Green Tech Malaysia to build and operate an EV charging network. Okay, this charge you guys can go to have a look on their website. So currently they have about 300 plus EV charging station in nationwide. Okay, so I think in their plan they want to boost up to about close to more than 2,000 charging stations in the future. Of course, there are also some other strategic investment in progress in other new startup as well. And the OSV, of course, is to support their own FPSO business. So I would say this company is pretty interesting. Okay, as you can see that they are right now, most of the revenue actually is still generated from this FPSO business. So we can see them as a traditional oil and gas players. But at the same time, they are the one that who venture out to renewable energies and to embrace the green technologies, which I think the management has been doing a pretty good job, okay, in identifying the big trend of the future, and they are trying to drive the company towards the correct directions. Okay, so I think they may have, of course, I would like to highlight that, no matter how, the FPSO business or the renewable energy business or even like the green technology, all these actually, they are capital intensive, okay? You need a lot of capital, you need a lot of debt to fund it, okay? That's why, some investor, they may shy away from this kind of companies because normally in the balance sheets, you will see they are having a big debt on their balance sheets. Okay, this somehow a negative point lah. Okay, but as a fact that you cannot remove of this because it involves a lot of money to build all these infrastructures. But of course, there are some investors that they may prefer this kind of business because you have a pretty clear cash flow projections in terms of coming from the leasing of FPSO or coming from this solar power plants or the wind power plants. Okay, so to some investor that chasing for consistent cash flow return, so they may prefer to or they may be interested to look into this kind of companies, of course. And the next is the supply chain crisis. So this is an interesting topic because as you can see that, during the COVID and after the war, we are seeing more and more supply chain disruptions happening over the globe, right? So for the past decades, we have been relying a lot is on the globalizations, okay? So this globalization, actually they help to reduce the cost of productions, they increase the efficiency, okay? That's why everybody we able to enjoy a pretty low cost of productions and a pretty cheaper goods, okay? But after the pandemic and after the war, I think everyone come to realize that actually when there's some part of the chain, you start to have problems, eventually it will affect the whole chain or the whole ecosystem. That's what we experience right now for the past 2 years. And so it's even worse especially in the semiconductor sector. And right now, semiconductor is very important to our daily life because essentially we rely a lot on the chips. Without the chips, I mean, we cannot actually even without the chips we cannot get connected to internet. Okay, we cannot pay, we cannot do online transaction, we cannot do the payment, and even right now when everything go cashless, like actually it all relies a lot on the computers, on the network, on the data center, and eventually I mean when the EV cars has been when everyone is driving an EV cars, without a chip also you cannot drive, you cannot go anywhere. So it's a very, very important parts, especially for the semiconductor for our human life. And you can see that actually the manufacturing capacity right now is tilted towards Asia. Okay, Asia is having more than 77% of global capacity in 2020. That's why you can see that you can start to hear the voices from the leaders in the Western countries. They start to say that they want to make sure the supply chain are secure and reliable in their own homeland. Okay, and then this is a national security risk if we don't have this. Manufacturing semiconductor manufacturing facilities in the European countries and in the US. So this is the dream, this is the plan that they want to push it. And then even the Intel new CEO is saying that a bet on Intel is a hedge against a geopolitical instability in the world. Okay, so as you can see, this is a pretty a clear graph saying that the East Asia region, Japan, South Korea, China, and even like Taiwan, Singapore, Malaysia, we are manufacturing hub over here. So over here, the US and the European, they are the one that who design, and they are the one that who to supply the equipment to this part of the world to manufacture the chips. So if one day, if we cut off, the trades from here to here, essentially they don't have, they don't have the goods. They would lose the supply of the IC chips, and not just IC chip, because most of the goods, most of the handphones, most of the the electronics items are produced here, right? So they can't buy it. So for them, actually, this is a very, very serious situation. And that's why they try to reverse it. So you can hear these days, there are a lot of terms like deglobalization, reshoring, nearshoring, or China plus one, actually because of they want to secure more. That's why over here, the US and the EU countries, they start to have plan. They want to subsidize. They want to encourage companies to set up manufacturing plants in this region. Okay, and so you can see that as a Malaysia, we are in the middle, right? So actually, for me, is in terms of how our companies, especially for the E&E companies, how they strategize themselves. Okay, because we are pretty good friend to China, to Korea, to Japan, to Taiwan, right? Actually, we are also a good friend to US, to Europe. So if we play well, if we play our book well, actually we can benefit from both. Because right now we will start to see more redundancy, because over here they are also building new manufacturing plants. Over here also China, because of they also have the 2025 the big plan to have a localized of the whole complete semiconductor supply chains. So eventually, if we play well, we can benefit from both sides of the world, right? So, but today I also want to study one of the companies that we guys, which is the DNEX. So DNEX is a emerging Malaysia semiconductor powerhouse. Okay, previously they just focus on IT and e-services. Okay, they operate the Malaysia NSP, which is they focus on the custom related transactions. And also they provide the government some of the IT solutions, and also they provide the turnkey solutions for the submarine cables laying in, especially in Indonesia region. And last year, okay, they not last year. Okay, last year they have boosted out their ownership in the Pink Petroleum, which they has asset in the industrial cluster in the North Sea. It's a JV with the hibiscus. Okay, so essentially the DNEC also is an oil producer. Okay, and right now, just recently they acquire Silterra, which is a semiconductor foundry in Kulim. Okay, so this is one of the, I mean, a few that the factory, local factory that we have in Malaysia that, and especially in the Southeast Asia region, which really produce wafers and IC chips. Okay, so they are the one, they JV with the China base, and then they also backed by this Foxconn recently, they also announced that they hold close to 4% stake in DNEX, and they look for more collaboration with them in the, especially in the EV related business and the EV's value change. So this is a forecast from the CIMB. So you can see that the major of revenue contribution, you can see actually will come from the Cetera, which is this semiconductor sector. And of course, the oil, the energy division from the Pink will also contribute quite a lot. And in terms of their bottom line, as you can see that the majority, their forecast will still be coming from the semiconductor, which from the chips, and the rest is coming from the oil as well. So the next essentially with the, I mean, escalating oil price and with the, with the shortage of the IC chips, I think in short to mid term or even actually for the long term, actually we can see that the business will still continue to flourish and they will benefit from both of these. Okay, so yeah, so here comes to our end. Okay, what we normally we advise the investor to have. It depends on what type of investor you are. So you can play around with your with your allocations, because allocation is very important. And at the time of this, actually we would like to advocate more patience, because a lot of uncertainties right now. And then I think it's better for us to be patient, okay, and not to simply silent in one or two stocks. Although we see that there's very sharp rebound especially from some of the tech stocks recently, okay, but still there are a lot of uncertainties, okay, like the war still, actually there's still no ceasefire agreement in between both parties, okay, and the inflation still, still keep continue going up. And then I think the central government also, they will still continue to increase the interest rate. So all this, and eventually based on the presentation that I present just now, actually there are a lot of risks that we may be experienced. Okay, so just be prudent and be patient in your invest. Okay, thanks. Shane, back to you.
Okay,
sorry for taking more of the time.
No problem. Thank you so much, King, for sharing with us the idea about how do we invest in the endemic pandemic era. So if any question for King, you may write in the Q&A, so you address them, but looks like time is running out. We'll just pick 3 questions to ask, right? So the first question is by Albert. Higher crude palm oil prices also enhances the government's coffers. So wouldn't this assist the economy when the government uses the monetary policy to revive our stalling economy? So what is your view on this, King?
Yes, it could. It could. Actually, I would see maybe the government, one of the coffers that the government can use also is to ask for more special dividend from Petronas as well, because I think they may be benefit from this round of the oil price. Okay. So yeah, I think the government may reserve to this lah. But
no, I think his question is on CPO.
CPO I don't study in detail, so yeah, can't really answer.
Okay, but now you just comment on crude oil.
I think you can go and read. I think there's one report from CMB is pretty good. Okay, it's saying that actually the subsidization from the government on especially on our loan identified is actually it's hurt a lot on the government. Yeah, so I think we may come to a point that the government may try to find an alternative venue to get more money. Yeah, and that's why I'm just saying all that maybe there's a chance that maybe the government may go back to Petronas to ask for more special dividends, like what they did in I think back in 2018, something like that.
Okay, so Wayne would like to ask, will the war cause shortage of semiconductor material in the supply chain? Like we know that Russia and Ukraine is involved in the gas supply, right?
Yes. So far, what I read is in terms of some of the special gases, okay, actually the percentage, I mean, for the whole supply chain is pretty small. So the impact will not be big, okay, as of current moment. And most of the players actually they have enough of storage, okay. So we may not see the impact so soon. But who knows? Maybe if the war drag, I mean beyond, 1 year, 2 years, so maybe we may start to see the impact. But there are also some interesting opinions saying that actually, in terms of supply chain, you have to see that there may be some alternative sources, which before this they cannot supply because nobody wants to buy from them because of the high cost. But right now, because of this disruption, you cannot get some gases from Russia. So if there are other countries that they can produce, but with the higher cost, you have no choice but you have to buy from their countries. So it's quite a complicated issue. So somebody that suggested there's other alternative options that we can reserve to resolve the problem. Hope that answers you.
Okay, thank you so much. Okay, looks like no more questions on my panel. All right, fantastic. So we can end about 10:01. All right, thank you so much, King, for your sharing. So now it's my turn to share. So thank you everybody for tuning in to this session. All right, so this is Bursa Academy. So if you haven't visited Bursa Academy, please go to visit Bursa Academy, as this is one of the academies with a lot of investing resources where you can find investing articles, investing quizzes, investing coursework, and also a lot of investing videos and recording for you to watch. So just head over to www.bursaacademy.bursamarketplace.com. So our next session is happening on this Friday, where we are going to dissect this technical indicator called Ichimoku. Of course, by the name suggests, you know that this is from Japan, right? It's invented by a Japanese. So Ichimoku sebagai petunjuk dagangan. So this session will be conducted in BM. So it's happening on 25th of March 2021, Friday. So 8:30 to 10 o'clock as usual. I've given you the link in the chat group. So you may register for this session if you want to learn how do you use Ichimoku to find buy and sell signals. All right. So with that, thank you, King. Ladies and gentlemen, you have just heard from King Hao Kai, the senior analyst of Spiral Thinker Group Syndrome Berhad. So thank you, King, for sharing with us the ideas and possible investment direction that we can look forward to in endemic and pandemic era. So right, thank you everybody, and have a pleasant rest of the day. Bye everybody.
Thank you.